Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Thanks for your attendance. Now, before we get into it, I'll just take you through the webinars from me this week. Tonight, we've got Forex trading live market analysis, and then getting into tomorrow, I'm going to be reviewing last month's trading and price action patterns. So we'll be reviewing what the market did. Can we learn from last month and help us with what's happening in the new month? So that will be tomorrow. My webinars are now at 8 p.m. Sydney time as we have daylight savings. So please make a note of that. And on Thursday, we've got live Forex market review. Again, that will be at 8 p.m. on Thursday. All right, so before we get into tonight's webinar, if I can get my PowerPoint to work. Here we go. Everyone, please, if you can read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to watch, or you can just follow the link and join us in the webinar. For those in the webinar, if you have any questions, just type to the chat box or the question and answer box. I've got both of those open, so any questions, just type up. All right, so please read through the disclaimer before we move along. All right, let's move along now. Just looking at who's on tonight. If you're new to the webinars, then my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD. And I'm a full-time Forex trader. I've been trading now for more than 15 years and mentoring for more than 10. If you want to contact me, my email is there. duncan.cooper@acy.com. Just email me. Through the week, you can connect with me at our website. Go to acy.com, Market News tab, or our YouTube channel, XAUUSD Australia, and you can connect with me as well through the week on my Twitter and LinkedIn there. I'm putting some analysis through there as well. So if you want to follow me, just follow along. As well, we have our Telegram channel. If you'd like to get access to that, just contact Nathan Bray. His email is there at the bottom of the screen, but I'll put his contact details in the chat there for you. So if you'd like to get access to the Telegram channel, or maybe get access to my chart layouts and templates for MT4 that I'm using, contact Nathan. He'll be able to help you out. He can help you out with setting up a demo account or setting up a live account if you're so inclined. Just give him a contact. He'll be more than happy to have a chat with you. His details are there. All right, so let's get into, first of all, the news items for the day. I always like to use forexfactory.com. So my time's shown are Queensland time, not New South Wales time, because I'm in Queensland. But you can go to forexfactory.com and set this up for yourself to your time. All right, so 1 o'clock in the morning, we have the US job openings. In fact, I'm just going to make sure this is set to my time zone because it doesn't quite look like it is. I am Brisbane. Don't know why it was saying Sydney, because so I always usually set to Brisbane, but there we go. All right, because I was thinking it should be coming in at midnight, not 1 o'clock in the morning. All right, so getting into the news events that can affect the market over the next 24 to 48 hours. Coming up this evening, as we move into Wednesday, we've got the US job openings. Then at 11 o'clock, tomorrow morning, we've got the New Zealand official cash rate. Expecting no change there. Today we have had the Aussie cash rate. We got no change there too. So we could have the same status quo there tomorrow. So that could be a very volatile time for the New Zealand crosses there at 11 o'clock in the morning. Then tomorrow evening at 10:15, we've got the US ADP non-farm employment change. And on the midnight, the US ISM service PMI. If we just head through the rest of the week, unemployment claims at 10:30 Thursday. And then the big one for the US and Canada here, the unemployment figures, okay? The US non-farm employment change figures, unemployment rate coming out there at 10:30 in the evening on Friday. That'll be 11:30 if you're in New South Wales, so you've already checked, your clock's changed. All right, for me, it's 10:30. So the market will be looking to this event for sure. So all the US pairs may go a little bit sideways or not. They've been heading down at the start of this week for sure, but the market will be looking to that event at the end of the week. All right, let's get into what has been a very positive time for the US dollar. So let's just have a look at the dollar index. And on Thursday, I was highlighting the opportunity for this to maybe pull back. So Friday, we did pull back, and we didn't quite get to pull back to the 62% level. But what we did do is pull back to this old high here at 105.87. So basically a major level of resistance. We drop this to the weekly chart. Let's get rid of that fib. This level 105.87, so the weekly charts had about now 2, 4, 6, 8, 10, 11, 12th week up. I'm just pausing because I've got some chat messages coming in. And you're talking to me about the New Zealand yen there, Lachlan. I'll get to your question when we get there, but yeah, we may have false broke the top up there. So we'll have a look at that, close look at that one. All right, so we have had 2, 4, 6, 8, 10, 12 weeks up here. Only had like half a week down, so this is very strong. We're already, if we drop to the monthly chart, having a new month up. All right, so on Friday, we managed to just test that area of broken resistance to be support on the day chart, and off we go. It's very, very strong. So, you know, shorting the US dollar at the moment is a very precarious thing. At the moment, I just be looking for maybe some kind of form of pullback. Again, a one-day pullback would be great. It's a little bit high up here. It's at the top of the move. So, you know, I don't want to be trading at the top of the move, but if we can get a 1 or 2 day pullback, that would be the key thing to watch at the moment. But from a major level point of view, next major level that we're heading towards is 107.67, and we can definitely see that level by the end of the week, depending on what the US job figures want to show. All right. Now let's get into the S&P 500. From a weekly perspective here, it looks like we're having a 79% failure of the major range. And we've put in a nice structured downtrend, a lower top and a lower bottom. Now, if we just drag this out of the way, so that it doesn't cover the most immediate price action, then we've had about a 62% rally there after the fall down. And we've touched the 127 extension. So I'm just going to drop this down to the day chart, and just bear with me one moment. All right, sorry about that. I had to change something technically. All right, so on my day chart here on the S&P 500, just want to show that, you know, we've had a move down. So I'm just going to my drawing tool out here. We've moved down, then we've rallied, and we moved down to the 127 extension here. So really, you know, once we get to the 127 extension, or even if we get down to the 162 level, this is overextended and then it's due a corrective rally. So really, you know, if we could have put a short-term low in there to then move back up this way. I'll have to wait and see whether the price can hold below this 143.23 level. But at the moment, it is very much into the profit-taking phase of the move. It can obviously move further down, but, you know, when looking to set yourself up for a position, this isn't really where you want to set yourself up for a position. So what I'd be monitoring at the moment is redrawing the fib down from this weekly lower top and then monitoring for retracement back up. All right, now You could actually be using that lower top on the day chart, but that's the larger range. And if we can get a rally, the 62% level, it's at 44.24, overlaps nicely with this broken support. So up there would be a very good level to watch if we can get a rally. Right now, if I'm just a trader looking to open a position, to me, this is in the profit-taking area on the chart. I'd want to see it rally to where you'd expect the sellers to re-engage. All right, so can we see a rally back up into this area? That doesn't mean to say it will, because what I can also see is we've just rallied really up to broken support, being resistance now, to maybe move down from that level. But I would much prefer to see a deeper rally if the market can offer it. There's a little bit of an imbalance in here too, so that area may need to be filled. All right, so that's my thoughts on the S&P 500. It's overextended. I'd much prefer to see a rally before then looking for the opportunity to sell. All right, let's get into euro dollar. All right, so I was looking up here at 106.35. It was broken monthly support over here. This is my day chart, and we couldn't quite get there on Friday. And it doesn't look like we're going to get there this week now because we've had a sell-off, strong sell-off into Monday down to Tuesday. So at the moment, we're into an area of support that the market's going to have to negotiate, 2 weekly lows here. So those lows are 105.16, and we have a low here at 104.81. So pretty much trading on that low at the moment. Now we may just see a rally back to the first broken low, 105.16 on the 10500 level. Traders maybe position themselves there to sell, and then we may see a breakdown below 104.81. In any event, we're just a little bit on support here at the moment. To me, just trying to sell, trying to break underneath that low is not the best idea. A better idea would be, just going to squash this in a bit, would be to see a clear break of that level first of all. So we don't deal with a false break. So we may have broken this level here, 105.16, but this level isn't broken yet. So if you're wanting to get short at such low levels, at least look for some form of rally. So I'm just dropping to the 4-hour chart. Now, moving back up to 105.16 could be a level to watch. I'd much prefer to see a higher retracement. So on the 4-hour chart here, we've got a lower top to the most recent bottom. I'd much prefer to see a bounce in this support area up to, in a perfect world, the 79% retracement up there at 105.63. Whether or not the market will offer that, I don't know. Moving down to the 15-minute chart, what I do notice today is the central pivot point is pretty much in line with that 105.16 broken weekly support. So that would be a very good level to watch if we can get back there today. In a strong downtrend, we had a nice downtrend yesterday. We spend very little time above the central pivot point. There's the central pivot point, the dashed line. All right, so I got a little bit above it yesterday, got up to M3, and then we collapsed all day. So I would be watching up here at the central pivot point today. If you don't have my chart, central pivot point's at 105.15, and weekly resistance is at 105.16. Support level we've broken. So that would be where I'll be watching today. We did break above that level. I can see that today's projected high overlaps with the 62% level at 105.42. So that would be another good level to watch. All right, but I'm not interested in engaging at such low levels. I would need to see an intraday pullback at least to 105.16 before then looking to see if I can get a tight entry trade back down. And, trading here, you have to be at risk-free by 104.81 because that could be support at the moment. All right. Euro yen. This is very range bound. It's failed at the top of the range. I'm just pausing because Tim's asking me a question about the S&P. Why not use a smaller range starting from 45.14? Let's go back to that one. Well, I did say you could use, that's the weekly range. but you could use that range as well. All right, either one will work. I'm using that one because it's the whole range, but you could use that range. You're talking about 45.14, so mine's 45.16 here, so that must be the high one you're talking about. You could use that range, but I'm using that. If I drop to my weekly chart, I'm using that one because I was drawing a fib on the weekly chart across that range. Failure there to the 127 extension, I'm anticipating that we'll then have a corrective rally of that whole move down based on the weekly chart. So I'm just using the larger range of the two. All right, but what you could also do is you could draw in both ranges. All right, and what we'll often get, you might get an overlap of the fibs. We're not getting a perfect overlap, but sometimes you can get an overlap of fibs, and that becomes a stronger level to expect the market to fail out. We're not getting an overlap there. So personally, I would use a larger range because I feel like we're at the profit-taking area here from the weekly perspective. So then we need a weekly rally. That's why I'm using the larger range. But both ranges could work. All right, back to the euro again. So this has been very range bound. Did have a nice failure at the start of the week up here. And we're back down to the bottom of the range. And what I've already noticed is, so I've got support here at 158.86, and I've got support here, weekly support at 156.58. So that's day support, weekly supports. And we've actually got weekly resistance and day resistance. So we failed at resistance in this range, back down to support. Now the 4-hour chart, we're already reversing down there. And I'm going to use the range from that low to that high. Now, in my mind at the moment, we're starting to get support down at the bottom of the range. So you should be maybe looking to trade back up to the top of the range. Until we get a clear break below support here, you know, support's coming in on the 4-hour chart here. You've got two lows here, another low here. This is potentially forming a higher bottom to that bottom there. Is try, you know, if we're at the bottom of the range now, you want to try and get in long to trade up to the top of the range. And what I like to do within a range is, if I'm going to get long from the bottom, I want to be in by the 79% level. So a little bit above that level at the moment. By getting in at the 79% level, so if I just grab my drawing tool, let's say we can get in at this level. Putting your stop just below support is you're going to be able to set up close to a risk reward of at least 1 to 3, fractionally better, targeting. So if this could pull back to that level there, targeting then the top of the range. All right. Now you obviously need to manage your trade as well, because there's no guarantee it'll get to the top, but we're reversing down on support at the moment. So you might be able to draw in a tighter fib across the smaller range here to try and buy a pullback. So let's have a quick look at that. All right, so if we drop to the 50-minute chart. All right, we're moving up here from support. Draw a fib in. There's the current range. If price keeps moving up, just drag your fib up. But what you're looking for is, let's assume that's the high at the moment. We may have to alter. Is you're looking for a pullback to the 62 or the 79% level if price can dip back down to support. So support's at 156.86 where it's coming in. Then that's it sitting in the middle of that fib range, fib levels there at 156.90 down to 156.82. So I would be monitoring to see whether the market could just offer a final dip down this has moved up to an uptrend on the 50-minute chart. Can it have a small fib pullback to then continue up the range? And then you can create a really limited risk trade with a maximum risk to reward targeting up the top of the range. So you can monitor that to see whether the bottom of that range is going to hold or a move back up to the top. And if we just head back to the euro-dollar, I mean, we are on support on the euro-dollar. So if the euro-dollar starts to want to head up from support at the moment, then, you know, we're on weekly support at the moment, 104.81. If this was to move above 105.16, then the euro yen is probably going to follow it back up to the top of the range. So, all right, euro pound. This is how I had it drawn in on Thursday, but just readjusting. What I was emphasizing was, can the market trade back up to the 79% level? This is my 4-hour chart. So if I drop that to my daily chart, it's looking like this. So we come up, and last week, 4 days held at this weekly high point. We sold off. Now we're coming back up. So are we going to have we sold off? Are we just going to come up now for a rally to then trade back down to larger range? So are we coming back up to the 79% level, or even maybe want to test 87 again? So the area we'll be watching for possible shorts is, can price come up to that area? So 86, 89 up to 8,700. Held there last week. Will it come up again? Maybe reject up there on the 4-hour chart, and then can you see a setup sell to trade back down the range? So watching to see this come up, and then if we can see this turn over down towards the 127 extension down there, or an even deeper move back down the range. All right. All right, getting into the Aussie yen. Had a perfectly lovely failure up here. If you were catching my commentary last month, which is on the monthly chart here, and the month before and the month before that, I've been saying, are we forming some form of right shoulder up here to this area of left shoulder head? Is this a right shoulder? So we actually came up on Friday and actually traded at 96.87, a key resistance level. All right. Are we having a major failure up there? Then we false broke some weekly levels. Trading, we're already having a week down already. So we're having quite a massive sell-off already in 2 days. All right. There's also 79% area here. Yesterday, all we could do was just trade to the 79% level on any upward move. So failed at the monthly level, held at the 79% level, and now we're trading down. Now, we've actually changed the day chart trend back to down here now. So the most strongest level really is this level here in terms of the level that we false broke. Closest one to 95.85. Now we are trading below this 95 level, but that's just a daily level. What I'd like to see, because this is quite overextended now, even though it's only traded down 2 days, is can it rally back up? Because I don't want to be, you know, there's 4-hour support levels here. Clearly this is maybe changing trend, and this could be an ultimate top for the month. Is I would draw a fib across the range, keep dragging it down if it wants to keep moving down. But, you know, the weekly level at 95.85, there's a daily level here. You've got your 62 level there at 95.99. I would be watching to see maybe if we could come up approximately to the 96 level. So 95.99 is approximately, you know, the 96 level. So my area to watch at the moment would be this area here. Can we come back into that zone? 95.85 to 96.06 and form some form of left shoulder, head, and a right shoulder here. All right, so watching to see if this can rally back up. All right. Aussie dollar. So a lot of these pairs at the moment need some form of rally. There's no way that I sell at bottoms or the bottom of a day. I'm going to need to see an intraday rally or like a day up, something. I'm not going to sell the bottom of a move. Now, these two lows on the Aussie, go to your weekly chart. There's two weekly lows here that we've broken below. And it's been a little bit zigzaggy, but we've been having a lower top, lower bottom, lower top to a further lower bottom on the weekly chart. It's been rather consolidated, but it's been holding that move. Now that we've broken below the weekly area here with a bit more conviction, I'll be watching 63.57 to 63.64 as my area for price to retrace back to. All right, this area here on the 4-hour chart. Just watching to see if price can come up. So I'd actually be watching two levels. I'd be dragging a fib from that high to low. Now that's only a very short rally, but it's a key level of support that's got broken. So price may not want to get back above that level. So the first area to watch would be 63.57 to 63.64, those two weekly lows. That could simply hold the market to continue down this week. Or we get a much higher corrective rally back up. So let's say this is a low for the interim week low at the moment. 79% level, 64.58 overlaps with this monthly support low that we've broken, 64.58. So it has been rather, it goes down, it has very sharp rallies back up. Thursday, Friday, we could get another sharp rally back up here this week. So I would watch for a short rally in the first instance, but then if that doesn't hold, I would watch up here. All right, so we get that would be the short rally, or we get a high rally to 64.58. Now, depending on what the job figures does, we could be back up there on Friday because we were down here last week on Wednesday. Thursday, Friday, we're back up there, and then we dropped pretty much 200 pips in two days, 2.5 trading days. So we could go all the way back up there and then back down once more in this kind of zigzag nature that the Aussie's been performing as well, with that S&P 500 being a little bit overrun down to the downside. If that rallies, we'll probably see the Aussie dollar rally because they're kind of correlated. They kind of move in the same direction. So if we get a nice relief rally on the S&P 500, we can see the same thing on the Aussie. So short-term level and a higher level there, okay. All right, let's get into New Zealand now. What were you saying, Lachlan? So we false broke 89.93, 89.90. I've got this as 89.69 on my charts. All right. So on the monthly chart, there's a high there, 89.91. I'm just using the most recent weekly top, but yeah, you could use that one over there if that's the one you're using. You get the same result. I might just put that one in. 89.918. And I just want to get rid of that fib at the moment. All right, so we're very high up historically. My charts go back to 1988. So, where it's been capped for many decades, what are we dealing with here? We're dealing with 1 to 2.5 decades, kind of approximately. Now this is where it's very expensive. Well, we are still in an uptrend theoretically from the long-term charts, but we're at very expensive levels. This level, that monthly area there, 89.91. This move up here was a false break. Got a couple of false breaks at that level before declining down. So, you know, the market knows where high price is, and that's high price. All right, so again, the weekly chart trend is still up, but it's not holding above these two weekly tops. There's another top here. That's a monthly top. That's a weekly top in here. All right, so we're false breaking this area at the moment. And Lachlan, you were saying the 97% level, sorry, the 79% level. So I just want to go back to the higher time frame. Just seeing where you're getting your 79% level. Or I'm not quite sure where your 79% level is. Are you drawing a 79% level? You're probably drawing it this way. Drop into my 4-hour chart. You're drawing a fib down like so. You got, all right, you got 89, 81, just like I have. That's how I draw my fib at the moment. That big sell-off that we've been having, and look for a rally. All right, now this might not be the bottom yet, so we may need to still drag this down. But yeah, like you're saying, 89, 81. I've got monthly here, 89, 91 to 92. That whole area up there would be where I'll be watching. That would be my most desired level to watch for a retest. 89, 68 is the weekly level. Just there. So really, it doesn't have to, you know, when the 79% level is above this resistance level just there, it might not get there if it rallies, because it might stop at that high. So sure, you can try and target the higher level slightly above the resistance level, but with false broke resistance, often what happens if we come back up is we stop at the level that we false broke. So the more recent level is the weekly level at 89.68. So we may only just come up to this level. So I'd be watching that whole area there. That will be the rally point to watch for failure at the moment. And then if we turn over there, then we could see, you know, over the next few weeks, a much longer term decline. It is worth noting that we're trading down to 88.16, which is a weekly area over here to the left. So whilst this looks negative, we could get support here then to trade back up. All right. But it is looking negative. Now, sometimes when it gets real negative like this, it doesn't want to have a rally back up. So the other thing to consider is when today's trading is finished. So I just want to get rid of that fib. Wherever today's trading finishes, all that might happen tomorrow. So today's high is here at the moment. So wherever today's low is, let's just assume it's there just so I can talk about it. Let's say it comes in there, is all that might happen is tomorrow we just trade up within the range of today's range to a 62 or a 79% level and then continue down. So sometimes it won't have as high a rally as you want. It just trades back inside the range of the previous day. So that's worth monitoring too. But you know, it's at the low of the move at the moment. So I don't want to be selling the low of the move, and I'm sure you don't either. So waiting for an opportune rally point at this stage. All right, so at the moment, I would be watching for the high move back up. We do have the interest rate decision coming out from New Zealand tomorrow, so that can definitely drive it up 100 pips or a little bit more. All right, not looking like it wants to have a look back at the moment, but yeah, you're just waiting for a setup now. It looks like we've had a very strong failure up there. New Zealand dollar, it tried to get back above this monthly support level. This is my day chart. This is a monthly support low that we've been below all the way through late August, September. Did actually close above it at the end of the month, but you can see Monday, Tuesday collapsing back below. So that was a false move above. I'm just trading to some support here. Again, we got the interest rate decision for the New Zealand tomorrow. So I will be looking for the rally still, like on the New Zealand yen. Keep dragging this down if it wants to drag, and then monitor the retracement. There is, on this pair at the moment, there's lots of support here. So this is not where you want to sell. You know, through the course of the day, you could be dropping down to a 15-minute chart in this area. Here it is. And seeing if, you know, if you wanted to trade up, this is the area where support potentially should come in with those 4-hour lower support levels. All right. You might see a reversal back up the range from here. I mean, that's up to you whether you want to trade the counter move, but it's not the area to be selling in because you can see all the support lows here that were forming through last month. All right, so probably trading into buy orders there. You can see more support over here to the left that was formed last month. So I would be just looking for a rally. The most obvious area is back to 59.85. This area here. That's assuming that we can get up there. So it's just a question of monitoring the rally. Well, no, how can the market rally at the moment? Having a very strong 2-day sell-off from, you know, last month finishing. All right, dollar CAD, I should say. I was looking for the potential for this to come up and hold here, but it's just been moving through. So like all things with the US dollar strength prevails. So at the moment, it's probably counterproductive trying to trade anything against the US dollar strength. Unless we get a complete job figure shift on Friday and a complete change in sentiment, just looking for pullbacks. Now, at the moment, it's committed above last month's high. It's committed above these tops to the left, which are weekly tops. We are in the 79% area though from the monthly range. Let me just redraw my fib. This range here. So back to the monthly. That high to low, we're at this 79% area. And the sell-off we experienced last month, intra-month, was from these weekly highs. But at the moment, we're trading above all these highs at the moment today. So we may actually be coming up now to the 138.61 level. All right. I would need to see the day chart really shout out that it's rejecting something and want to reverse before looking to short this at the moment. Really supports now here at 136.54. If we can get a pullback to this weekly area of broken resistance, that would be the level to watch. The 4-hour chart. And there's a 4-hour low here where we pull back. I'll just be dragging the fib up the range as it's forming. And you know, if it does top out here, the 79% level on pullback is where that weekly support level is at 136.54. So, you know, look for a pullback. Don't have the fear of missing out and be a buyer at the top of the move. I mean, we are at the moment trading above last month's high here, but as we all know, last month's high is often false broke. So I wouldn't want to be a buyer just above last month's high. I would look for a pullback. All right. And I don't think I went through the pound pairs, did I? So I apologize. Let's go back to the pound pairs. Pound dollar. Now, very much like the euro dollar, it is declining. Was hoping at the start of the week we would get up to the 123.08 level, but we've not been able to do that, and just further putting in a lower top. All right, so really, and we've broken through this little level of support from last week. I would keep that line there at 121.90, this level here. We could revisit that. We could revisit the 122 level this week. But again, we're a bit on the bottom of the move at the moment. Now, from a weekly perspective, there's a good distance to the next level of support at 119.15. A little under 200 pips. But if we can get a rally back up to maybe the 122 level, there's plenty of room there to trade down to support. First level support's at 19.15. All right, clear downtrend. Just be monitoring. There's a 4-hour lower top. Now, 7% level, if let's say price doesn't move further down in the short term, 7% level is just underneath 121.90. And, we could monitor that larger range, 62 levels at 121.90. So we could actually have overlapping fibs in that area where broken day support is. 121.90 up to 122. That would be a good area to watch in there. Get overlapping fibs there if price was now to rally back up. All right, but don't really need both fibs in. It's a little bit messier there. One fib would do. That's 79% level. So just this area here, that's the level I'll be watching at the moment. Can we rally, turn over to trade back down? All right, getting into pound yen. Now on Thursday, I gave you a great level to watch. So watch this broken support level, 182.67. It traded there Friday and Monday. I don't know if anybody took a trade up there. All right. So it actually gave you a little 79% retracement there on the 4-hour. Came up to 79. So failed at 182.67 on Friday. Into Monday, 79% retracement, failure at the resistance level, and we've traded down. So we're always at the bottom of the move. We've actually had a reversal candle there. I wouldn't be considering trading back up against a trend, but I just want to go back to the daily. I do have this line of support here. This line here is monthly support from the monthly chart. We've moved above this old low, 180.41. All right, so a little bit short of that level, and it offered good support there. Went down to 180.32 in this area. So I'm using the monthly level, but you could put the daily level in. It's very close, within 8 to 9 pips. So I'm just using the monthly level because it's the higher time frame, 180.41. And we are having a reversal candle there. We're obviously, folks, breaking last month's low, last week's low. So we could actually see a reversal back up the range here. But the trend's down. I would much prefer, we're seeing yen pairs selling off. I'd much prefer to look to see if this could rally back up. Back up high to the 79% level for maybe a further sell-off. Keith, no worries. He's got to run off. Lachlan. RA is confirming what I was talking about. All right, so, another pair there. Look to sell a rally. If you thought this was going to hold into this range, let's just go back. You could maybe be going counter trend with the idea that we're forming a bottom of a range here. If that was the case, draw a fib from that low to high. So that's the bottom of your range. Back to the 4-hour chart. With false broke, you really want to get long before the 79% level, stop below the low would be the trade. But you are going a little bit counter to the overall sentiment of the market across a number of pairs at the moment. All right. I'd much prefer to not trade at the bottom here, but look for a rally. But there is the option there to trade from possible bottom of the range there back up to the top of the range. All right, so that's the pound pairs covered. Frank, the area that I was potentially looking for failure has become support. So we're actually still in a monthly rally here, a bit like the dollar CAD as well. You know, we're still in a downtrend on the dollar CAD and the dollar franc until they take out their last lower top. So we're coming up close to the 79% level. Today chart, the area that I was watching for failure, we broke above last week and it became support Friday on a pullback. A bit like what the dollar index did. It moved above its resistance level and became support. All right, so this still has the opportunity to fail and put in a lower top on the monthly scale, and we're very high up here, so I'm not really engaging on the dollar franc at the moment. We could obviously keep plowing up in line with the US dollar strength to challenge the monthly lower top. Personally, I'd just maybe, as we're heading towards the job figures, is just watch this 79% level to see if we start to get reversal up there. That's at 92.49. I need to see some price action come around the corner to prove a failure, but at the moment it is in an uptrend. If you want to engage the uptrend from the 4-hour chart perspective, you know, look for, if we use the right tool, look for a 4-hour pullback. It's in a 4-hour uptrend. Look for a 62.79% retracement to buy a dip in line with that trend. But just be aware where that 79% level is. 79% level from the monthly scale is at 92.49, okay, up there. I'll just leave that 4-hour chart like so. And be aware where the 79% level is. All right, dollar yen, you actually got, I'm pretty sure it hit the 150 level today. If it hasn't hit it, it's gotten very close. Oh, it's been to 149.93. All right, so we all know it's in a monthly uptrend. Could be attacking last year's high. It's been moving above some historical high points to the left. Next one, these to the left here are a bit hidden now. So next major one is last year's high at 151.94. Monthly trend is up, the weekly trend is up, and the daily trend is up. It's just a question of, are you prepared to be a buyer at such high levels when, you know, the obvious concern is, does the Bank of Japan want to come in and, you know, intervene? So it's a tricky one. In terms of the fundamentals, they all support the dollar yen moving higher, but there's going to be a point where the Bank of Japan probably will intervene. So you have to be aware of that. So, all right, so at the moment, the 4-hour trend is up. This line here, 148.84 for my day chart, is this area that we broke above last week. So again, you know, don't get caught at the top. Look to buy a dip. The 79% level of that range there on the 4-hour chart overlaps with the broken daily level of resistance. It has been rejected once, so it moved above here and became support through here. Got rejected there on a, must have been a news event. So that would be the area that I would watch this week for a pullback. Well, 148.82, 148.84 is the support level. You could also monitor, you could draw the fib from last week's low, which is here as well. And the 62 level of that range comes in. So it's kind of the same area as using the fib from this level. You just get a 79% level in there. So, you know, for me, if I wanted to trade that pair, it's too high up where it is right this second. If it could pull back, day support at the moment is at 148.84. We got the 79% fib there on the 4-hour range. If you want to engage on the dollar yen, that would be a level to look at. Can you see your setup to buy if price was to move back down to that level and then start to hold? But I wouldn't be looking to try and get caught at the top there. Now we are seeing the Aussie yen selling off. We're seeing the Well, euro dollar is rather range bound. Pound yen's been selling off. New Zealand yen's been selling off. You know, other pair. The only thing that's keeping this up at the moment is the obvious strength of the US dollar. But you know, if we get a bit of a risk off environment come into the market, this dollar yen could, you know, certainly see some short covering, or as I say, not short covering, long covering, as short start to come into the market. All right, might be a lot of exposed long positions up here. And if this started to pull back a little bit, they'd have to start to cover. All right, last thing to look at, gold. Heavy sell-off. I've been saying for months about this triple top potential up here to move back down to at least support at 168.78. All right, got a bit mixed in there last month. This area through here around about the 1916 level, but we're back to lower top, lower bottom on the weekly here. It's a bit overextended for sure. Most immediate range, I think you have to monitor the most immediate range for a pullback, which is there on the day chart. I just want to go back to the weekly and put in the line here. 1884.77. So we had a very large week down last week. So obviously there must have been a lot of long positions decided they were wrong. All right, strong selling. Once we broke below 1884, we couldn't actually get back to it on Thursday, Friday, but we're due a rally of some nature. All right, that fib level, or the fib tool has been drawn across there. You know, 62 level is above some support lows here, so we may not be able to get back to 62 level, but two support levels there being broken. This area through here is 1884 to 1892, could get up to 1900 level. That area there, I'd just simply be watching to see if we can rally back up into that zone. And then do we see the market turn over for then a further decline? Notably, it is worth noting, we're overextended. So if we don't rally yet, we could hit this low. I think this is the low of the year. If we hit the low of the year and we don't just go straight through, we could definitely rally off that in the short term. So that's 1804.54. Market's going to know that that's the yearly low. So if we don't on the day chart have any rally, I don't know if this can keep going down without a rally. All right, it's overextended already. So if it was to trade down there, I would expect to bounce from down there, and we're looking for it to come back up to support, broken support to be resistance. Okay. So a number of these instruments at the moment are overextended, and I don't get caught selling at the bottom. Right, so that's my view on gold at the moment, a bit overextended, needs a rally. So watching up there, 1884 to 1892, 62 level there is at 1896. All right, so back up to that area. All right, any final questions? Locking, you're saying on the dollar yen, could you put a sell stop order below the day's swing low for dollar yen just in case? What if you're long? Are you saying if you're long the dollar yen at the moment as a safety point? Is that what you're asking me, Lachlan? So you're saying, could you put a sell stop order below the day swing low for dollar yen just in case? What, in case of a collapse, so you get short? The most, I mean, from the day chart perspective, the higher bottom here is at 148.52. I mean, you could have the idea that if we are going to get a turnover at such high levels, shorting a break at 148.52 could be an option, but then, you know, you're gonna need a larger stop, because where do you put your stop? Really, you know, if you're short a break of that low, you'd have to put your stop above here. So you'd be risking, I don't know, 150 pips or so. It's quite large. All right, hopefully that answers your question, Lachlan. All right, I'm just about to wrap up. If there's any more questions, just put them in. So just as a reminder, tomorrow, my webinar tomorrow is in at 8 o'clock again, and it's going to be a review of last month. So I'm going to look at the support and resistance in the market structure that formed last month. What patterns then formed? How could you have been trading? What could you learn from last month to carry forward into this month? Last month there were lots of nice compared to the US dollar, likes of the euro dollar and the pound dollar. There were lots of nicely broken levels of support, became resistance to trade down from. All right, so if you were just trading that kind of very simple approach, the market structure very nicely offered that. Christine, you're asking, will you do a day chart again in Telegram, YouTube? At this stage, I'm not, but if AC White wants me to do it again, I will. All right, so at the moment, I'm not, but things could change back to how we were doing it before. You could put it, you know, if you have some feedback, you could send it to Nathan's email, some feedback, he could pass it on. If you have some feedback, I know there's been a few analytical changes. If you have some feedback, I'm sure they would like to see what the feedback was. All right. All right, with that in mind, coming up for me then tomorrow will be a review of last month. What can you learn from that? And then more analysis for you guys and girls on Thursday. Take note if you came in late today or you just catching the recording because you didn't know why I wasn't on at 7 o'clock. Now that we have daylight saving changes in New South Wales, my webinars are at 8 p.m. because I'm sitting in Queensland and my times haven't changed. So I'm still operating at the same time, but if you're in New South Wales, of course, the times have changed. All right, Christina, thanks. I got your message there. Yeah, just send some feedback to Nathan. He can pass that along. You can have a chat to Nathan if you wish as well. See what you can sort out. All right, everybody, have a great trading week. If I don't see you through the week, but other than that, if you have the time, look forward to catching you tomorrow. Thanks, everybody. I've got one more question here from Timothy before I go. Or I've got some questions here that I've missed. Sorry, my question and answer box hasn't been scrolling. So I'm just going to stay on and make sure I get all everybody's questions here. So Lachlan, I'll just deal with your question first. All right, you're talking about going short if an intervention came. Problem with just putting a stop there if an intervention comes. If an intervention comes, you don't necessarily get filled at your stop level because price can be gapping. So I think that's a little bit dangerous. Because and as well, depending on where price is before the intervention comes, you might be getting filled at the bottom of the intervention, then it spikes all the way back up. So just having a stop there just because of you want to get filled because there's an intervention could be dangerous in terms of you know, how do you trade that if one was to come around the corner? I don't think that's the best idea, just having a random stop there that will just take you in because you could get a slippage on the stop. And it could happen when you're not monitoring price action as well. And then, you know, you could get put in and then it reverses back up. So Timothy, you're asking me on the dollar yen. Last week we expected that price will trade down to the 7% fill level, but it continued to extend upward. This makes the use of the fib tool complicated when you're looking for a retracement up to either 62.79, but fail to get to either of the levels. Well, of course, when you're using the fib tool, you are waiting for a retracement, and sometimes when you're putting the fib in, assessing and looking for a retracement, it doesn't happen. So, you just wait. Trading is a patience game. If you're waiting for a pullback to a particular fib level and it doesn't occur, it just doesn't occur. That's trading. You're asking me, how exactly do you determine when retracement has begun? If I was looking at a chart, for example, let's say I'm just going to do a hypothetical, and let's say price action has moved up and you've drawn your fib across what you think is the low to high. For me, really, if price hasn't yet pulled back, say below the 38, then potentially the retracement hasn't really started. All right, so if we start to see a pullback to 38 to 50, or getting towards this zone here, then in my head I'm thinking, okay, I'm looking for a 62 to 79% retracement level. If really we're just getting a very short movement that hasn't yet got to 38 and then continues up, I would just redraw my fib from this level up to that level and keep monitoring the fib. Okay, hopefully that helps you. All right, I'm just going through all my missed questions I didn't see on my scroll. And you're asking, so Timothy, you're asking about last week's range. You're talking about last week's range when last week, the one that's just finished, or the one of, I'm not quite sure which range you're talking about. In the most immediate week that we're in right now, last week's range is here. That was last week's range. So I'm just going to assume this is a range you're talking about. We already had a 62.79% pullback within that range at the latter end of last week. So now I would be anticipating that price action, that was the move up last week, and then before the week finished we actually pulled back within that range, and now we're probably heading up towards that 127 there. And then what I would do is draw a fib from there up to that high, use that range. And that was the range that I was just discussing before in my analysis. So hopefully this is all making sense. So the current range that I'm using right now in my analysis today was having that drawn like so. All right, because last week's range was there. We've already experienced a pullback within that range. Then we moved up almost to the 127 extension of that range. So I'll be monitoring the next pullback if it occurs within that range. Hopefully that made sense to you. All right, so you're saying range before last week's range. All right, well, that's how I would deal with this range. And if we looked at the week before, so the week before's candle high and low is just, let me just get that in there. All right, that was the range of the week before. All right, let me just double check that range. All right, that would be the range of the week before. Now, at the start of the week, we broke above the high of the previous week, and then it never pulled back. So you can't look for a retracement back inside the range. What I would be doing in that respect through the course of the new week. So the new week is really this price action coming up here is using that low there, the previous week's low. I would simply be dragging my fib up, looking for a pullback, which I would have had it drawn to there. And then we pull back to the 50% level, never came back to the 62 level. That's how I would have monitored that. That's how I would have drawn the fib. I would have been dragging it up from the previous week's low up to the new week's high and monitoring that range. Okay, because there was no significant pullback as we broke above the previous week's high and we just went up all week. All right, that's how I would do it. All right, if that's not clear, send me an email with a chart and I'm happy to, get back to you. All right, everybody, I think I've gone through all those numerous questions and comments. Hopefully I did. If I didn't, just send me an email. I'm happy to get back to you via an email, okay? Thanks, everybody.